Good morning, everybody. What is going on? Happy Monday. Morning. Is this ICT? I'm not ICT, but I do trade using ICT concepts. Morning, plug. Alright, hope you guys are doing well today. Hope you are doing well. I'm going to share my screen here. Alright guys, so there was a trade I was looking for after this. If we look on the 15-minute, we had this liquidity sweep. I wanted to see us push down at least to VWAP. And then I was going to get an entry on the 5-minute, but I was waiting for a break of structure or market structure shift, which didn't happen until over here, and at that point it was too late for me to get an entry in this position, so I just didn't end up taking it. But yeah, the fair value gap was something I was looking at up here, this level exactly. So, you know, right here could have been a good entry. The only issue with that is not waiting for the actual market structure shift, and then price could end up trading back up once we came down and filled this fair value gap below. So that's something to keep an eye on, and that's kind of why I didn't get my entry at that point. But these shorts are still looking pretty good. We're right around VWAP. We just formed this fair value gap that we traded into. We're getting that reaction. We might see price continue down. Let's see what happens here. Alright. You know, maybe catch it down to the second standard deviation of that breaker block we had. We'll see if the shorts want to continue, if we're going to respect this fair value gap. We have this 1 minute right here. Got this 1 minute, but we could see price come back all the way up into that breaker, so I'm going to be a little bit more patient. Let's see. If we start to get a reaction to the downside, though, I will look for shorts and keep my stop kind of above this 1 minute, like 45 ticks or so, depending on my entry. So let's see here. Let's see here what we do. I want to see that reaction off VWAP before I get into anything. I don't want to rush into it. I don't want to get in a position and see us push up and try to come back up into our breaker. So that's why I'm waiting for a clear reaction, a little bit more momentum. We already closed above VWAP here on the 1 minute. That's another reason I'm kind of waiting. Same with ES, but we still have that imbalance. We do have some order blocks above. And that 5 minute wick all the way down, we didn't close below VWAP here, so another reason why we had that order block here. We hit our first standard deviation off that breaker. So this is a point where we could see retracement. That's why you see me being cautious, not really jumping into a trade yet. This 15 minute, we've got about a minute and 20 seconds left on. Remember guys, today is Monday. I always assume on a Monday we're going to have a ranging kind of day, which so far we have had a very ranging day, up and down. So it's about finding the top of the range, the bottom of the range, and being able to catch breakers like this one, right, that are going to give us higher probability setups on ranging days instead of just trying to chase price and then, you know, try to get in the shorts when we're at the bottom, try to get in the longs when we're at the top. Because, like I said, on a ranging day, that's not really a thing. Typically, we will go up and down, up and down. Sometimes we'll see a little bit of a breakout, but for the most part, we don't break out too much. It's more liquidity sweeps like we've seen so far. We look here, we came up, took out London high, came down, took out London low, came back up, took out that high, and coming back down. So that's typically the kind of price action we see on Mondays for the most part. For the most part, that's kind of what we see. But yeah, so I mean, today, guys, we don't have any news. So no news Mondays are interesting. Look at that reaction there. That's a strong bounce from that level. Strong bounce. Didn't get an entry though, guys. Didn't get an entry. Let's see. I want to get a better entry to be able to have my stop above. And it's okay. Not worried here. Some of you guys might have gotten an entry if you did. Good setup. You could sell around here. Could hold it down to our second standard deviation. If you guys got an entry. I know I didn't call it out. I didn't get an entry on this yet, so. But that's the level we're talking about. We have that 1 minute fair value gap. Price retraces into it off the breakout. You would expect price to come down, but when we see long wicks on the 5 minute like this, bouncing off VWAP, keeps me a little cautious. We have a 5 minute order block. Keeps me away from taking that entry for the most part. But again, not a bad entry. Not a bad entry at all. If you did take it. If you did take that entry, depending on, you know, where your entry was. If it was where I had mine, that's 94 ticks. So the idea is there. I just didn't capitalize on that one. Let's see, another long wick down there on the 1 minute. We still look very bearish here. Price still looks like it wants to drive down a little bit. Again, guys, and my main reasoning here is we have this 4 hour fair value gap that we formed when we had that huge drop. Prices come up to that 50% range. We've wicked above, but we've not closed above that 50%. Or that's not of the 4 hour. But we have, excuse me. Let me actually see on this real quick on this 4 hour. If we have closed above, we have closed above the, sorry, we have closed above the 50% level. But we've seen a strong reaction down from this 4 hour. So that's why I've kind of been looking for longs overall, but, or sorry, for shorts overall. But again, ranging day, so we could see us come down, grab this liquidity, and then head right back up, right? So definitely something to look out for. Again, there's been a few opportunities for trades, right? We formed the 5 minute breaker. Now, I would have waited. Obviously, I wanted to wait for a market structure shift for us to close below this low and then retrace. I didn't get that opportunity, so I just waited and didn't hop in. The more aggressive entry, which would have offered some good risk management, would have been entering off this 5 minute fair value gap up here. That would have been a really good entry on that, but you wouldn't have waited for that market structure shift, so it is a little bit more risky. It is a little bit more risky. Okay, we just formed another fair value gap here. See if we trade up into it. If we get a reaction off this fair value gap, I'll look for the shorts again. I want to see a reaction though. Don't want this to be the turning point where we head back up to the highs. So we'll see what we do here. Okay, I like that. I like that reaction so far. But we still look like we're trying to push up a little bit into it. But if we start to get a reaction off this 1 minute, I'm going to get an entry in the shorts here. If we start to see a little more of a reaction. No, I didn't take that trade. I did call it out. I did talk about it, but I didn't get an entry on it. Alright guys, I think I'm going to get an entry here. I just got an entry in the shorts, just half a lot. I want to test this out and see if we do get this drop from here. I want to just test it out, and I'm going to just keep my stop up here. My entry on this is 301.25. So I'm going to keep my stop just around VWAP, about 50 ticks here. 18.313.75. If I get stopped out, I get stopped out. Remember, half a lot, just testing it out. I want to see if we get a reaction off this level again and come down to our second standard deviation, down to like 124 ticks at least, and then possibly down to these lows. Again, we haven't seen a very strong reaction, so if you want to stay out of this, you can. Remember, it's always your choice. But we haven't seen a very strong reaction from this level. We've seen a little bit. We've seen this stalling, but again, we still have room to retrace a little bit higher. So, you know, this is just kind of testing it out, trying to see if we're gonna react. I want to have a position. I'm willing to risk it with half a lot. We formed that another breakout fair value gap. We trace back into it. We're under VWAP. So I'm just testing it out. And yeah, if it is oversold, it's oversold, and I'll get stopped out with half a lot. But you know, if price action plays out like I want it to, we'll catch a good risk to reward setup here. All right, we got like almost a 2.5 risk to reward on this. Down to our second standard deviation off that 5-minute breaker up here. And again, if we retrace, I'll look for another entry. If we come back up towards our breaker, that's fine. That's fine. But whenever we form these breakout fair value gaps or order blocks after we form a breaker block like this, and we still have an objective, we still have liquidity levels to take out below, these are the entries I like to take when we're offered with good risk management. When I can keep my stop up at VWAP, up at the top of this fair value gap, I'm good with taking this trade. Like I said, I'm testing it out, testing the waters here, seeing if this trend is going to continue to the downside. Alright, trading with the trend, and if the trend doesn't play out like I want it to, oh well. Let me get rid of this here. Okay, so this would be the TP level I'm looking for here. Alright, and if price comes down, takes out this low, that would probably be a good first TP here. I'm just going to add into a full here. I just add into a full. So first TP would be down at this low here. So I'll look to sell half my position down at this first TP, and then look to hold down to our second standard deviation down here. Okay, my entry is at 301.75 now. Look at that drop. That's a good drop. We just got to see that follow through now. Got to see that follow through. Take out that low. Again, if you want to catch a 1-to-1, you want to sell at 50 ticks, you can do that. I want to hold down to the break of the low. I want to hold down to a full TP. And we'll see if we get that. Alright, I like the setup. Now it's just if we get the follow through. You could also move your stop down to this high if you want to lower your risk at this point. If you want to lower your risk, you can move your stop down to this high, and you know, you're not going to give yourself very much room, but you could do that. That's an option. Yeah, we could we could see a pump here. This could be a fake out. All right, that's okay. We had great wicks from that level, great reaction. So we'll see. Our 5 minute is kind of split right in the middle right now. 5 minutes about to close. Again, like I said, there's a possibility that we see retracement. So yes, I am in retracement. I am in a position right now. I'm in the shorts. Entries at 18,301.75. We're targeting our second standard deviation down at this low here. First TP is this low. Nice drop there. Nice drop. Let's see if we just hit a 1-to-1. If you guys want to take your first TP, you can take that at 1-to-1. I want to hold down to the low. I want to see a break of that low. Again, we've already hit 1-to-1, so you can take that first TP. That's up to you. I'm sticking with my plan here. I'm sticking with my plan. Let's see us drop through that first TP. I want to see us drop through this. Again, like I said, guys, we just hit 56, 57 ticks, so that's over a 1-to-1. Oops. If we do stall a lot, I will look to just, you know, sell my first position around this level just because we're above a 1-to-1, but I'm still liking this. I'm still liking this trade. I'm liking our momentum that we have. I love that last 1 minute candle we had. 5 minute looks good. Look at that. First TP just got ran through. We're good. I might keep holding this, guys. I might sell at second standard deviation. We'll see what happens here. We'll see what happens here. So I'm still holding this. Yeah, stop to break even, of course. Stop to break even. Remember, whenever I sell my first TP, whenever I hit my first TP, I always move my stop to break even, because then it's a risk-free trade. And we're good. And this is exactly why we move our stop to break even, because sometimes we're going to see a liquidity sweep after we take out that level, and then we're going to come up and get that real retracement, right? Again, we have this OB right here. Let's see if we bounce from it and continue to the downside. For now, I'm still holding. Still holding. Either way, risk-free trade on this one. Risk-free trade. We just caught 93 ticks, so I mean, I caught technically 69 ticks on that. For my first TP, it was 69 ticks. Okay, so I'm going to keep holding this just because we do have that momentum. Again, this could be a liquidity sweep, so if you want to get out fully, you can get out, or you could keep holding it. That's up to you. We did just see a long wick on our 5 minute, so, you know, we could see price start to pump now. We could see price start to pump from this level, but I'm gonna continue to hold this until either we hit my full TP or I get stopped out at break even. At this point, I might as well let it ride. I'm not gonna sell. Right, it's risk free. Already made my money, so I don't care if I get stopped at break even. It's a winning trade either way. Either way. See, if we're going to react, if we're going to see us continue to the downside, we need to see us bounce from this 1 minute order block here. If we don't bounce from this 1 minute order block, I think we'll really pump through these highs. So we'll see what happens right now, guys. That was really close to my break even there. That was awfully close. Awfully close. It says my break even. Where is... Alright, now I'm out. Now I'm out. Alright, I'm out of that position now. Good scalp there. Get about 70 ticks on that one. Quick win. I'll take it. I'll take the quick win. Alright, we caught it at a good time. Again, we still have potential to come back down. I'm not going to get a re-entry here just because we saw that strong bounce. But again, there's still potential for us to drop, but like that. Like that crazy bearish candle here. Look at that crazy candle. That was a big drop there. I mean, our 5 minute very sideways here, and then we see us. Oh, that's our 4 minute. Sorry. Let's look at our 5 minute. Our 5 minute. Look at that long wick down on the 5 minute. Again, this could act as an order block here if price is going to continue to the downside. But we did come down and sweep this low, and we got a strong reaction back up. But hey, a win's a win there. A win is a win. I'll take whatever I can get on that trade. Solid 70 ticks. Who caught that trade with me right there? Quick scalp. Who caught that scalp with me? There we go. There we go. There we go. That's what I'm talking about. We got everybody winning here. That's what it's all about. Is anybody still holding the shorts right now, or is pretty much everybody out of this position? Phoenix, you're still holding. Radical, you're out. Yeah, I know some people might have had a higher entry than me, so some people might still be holding this trade. I mean, like I said, shorts still have potential here. I mean, look at that drop we're seeing. Shorts do still have a lot of potential to the downside here. Of course, man. Yeah, and that's what I mean, guys. I mean, yeah, if you're still holding these, I would hold them. You know, if I was still in this, obviously my full TP is down at 18,270.25. But even down back to this low, you know, if we're gonna go down that far, I don't know if we're gonna drop that far. But like I said, guys, when you see a breakout, so what my original plan I didn't get to take, right? My original plan was gonna be off this 5 minute breaker. I was gonna wait for retracement into that breaker, take it short. Didn't happen, and I wasn't going to chase the shorts, right, because we didn't have any retracement. I didn't see any opportunities at the time. And then, I mean, there was opportunities, right? We had fair value gap here, fair value gap, but I was preparing for this live session, so I wasn't taking any trades. But then we had this fair value gap. I didn't get my entry I wanted, right? I kind of missed out on this one. I did call this out, and I know some people might have taken it. But then we formed another breakout fair value gap. We retraced into it, and then I'd get an entry. So on breakouts like this, if you still have a target in the shorts, if there's still liquidity that you want to take out, that you think price is going to take out, then you wait for breakout fair value gaps, you wait for order blocks to form, and then once price retraces into those fair value gaps or those order blocks, that's when you're executing those trades. That's when you're looking for good entries. Okay, because that is what offers us the best risk management, is when price retraces on a breakout and into a fair value gap, into an order block, and we start to see that reaction. That's what I did here, right? Even though we were pretty low down here on the breakout, we were still below VWAP. We formed this fair value gap. We trade into it. We take it short. And then, right, we take one position out. We sell full or first TP at the break of this low, and then move our stop to break even. I trade with small volume, and my volume is not to the extent that I wanted to close half of it on the TP and come out. Is not to the extent that I want to close half of it on the TP and come out. So you just want to hold your trades. I mean, if you want to hold your trades, that's, you know, what you could do is you could just move your stop to break even once you see that first initial breakout, and then you could continue holding for a long time until you hit your full TP and not sell anything. That's up to you. or you could leave your risk in the market and you pretty much just have to hold that trade for the whole time. But I like to take my first TP, at my levels, and yeah, take my profits. That's my style. Sometimes I'll just sell my full position out of TP. I won't even leave runners. If it's a strong liquidity level where I know price is probably going to reverse, then I'll just sell my whole position and get out, and not even let it go back up to my break even. But again, I had another low down here. We had our second standard deviation off our breaker, and then we have our third standard deviation off this low. So the levels lined up perfectly to our lows. So I was very willing to hold this trade. Yeah, so when I'm waiting for a reaction, guys, basically what I mean is like these wicks. When we trade up into it, I don't want to get an entry in the shorts off aggressive bullish candles. I want to see us start to kind of fail and start to stall. Notice how we stall here and we're failing. We see a lot of weak bullish candles indicating that we might see price start to drop. So once I see price start to drop, showing weakness, right, we're not seeing follow through on the bullish side. That's when I'm thinking, okay, I'm gonna get in the shorts here, because we're seeing a reaction off this level. We're not seeing price running through, disrespecting it. We're seeing price not being able to push through, showing strong resistance, right? Yeah, I mean, like I said, guys, and then look what we just did here. We form another fair value gap, we trade up into it, and then boom, we drop again, right? So our levels are playing out pretty well. Our levels are playing out pretty well, but we have to look at our higher time frames. Look at our 5 minute. 5 minutes still looks bearish, but we did not come down and displace this low. All right, we came down, grabbed liquidity. So our 5 minute looks like we could reverse here. Our 15 minute looks like we could reverse here. All right, if we're playing off this level right here. But again, it is right. It's a ranging day, so we could see a bounce from this level, or we could see us come down, sweep liquidity, and then come back up. So that's why I want to just hold my trade at break even and just let it ride. And now, when you see a lot of, not always, Mondays are not always ranging days, but typically, especially on a day where there's no news, they can definitely be a ranging day, right? No news Mondays can be very rangy. They can really go up and forth, or back and forth, up and down. And then, but guys, another thing is when we form a bunch of liquidity, look how we generated all these lows down here on a breakout, and then we retrace. That's another confluence for me to still look for shorts. When we see us form all of these lows down here, and then we retrace back up into like another repeating array, another level, I'm expecting price to continue down and try to grab that liquidity, right? Expecting price to come back down and grab that liquidity. Yeah, relatively equal lows, exactly. That's where our liquidity is. So when we see price generating like 1, 2, 3, 4, right? We have all these lows. Although we took out this liquidity, then we form these lows, and we have not swept this liquidity, right? So that's when I expect a possible, retracement back up into a PD array, and then price will come back down and then sweep our generated liquidity below. All right, so that's something else I look for. Yeah, guys, the way, and honestly, this is my strategy. This is the way I look at the market. I think it's pretty much a combination of supply and demand and ICT concepts, right? I think people are too caught up on which one is better, which one is the real strategy. You can use, like, both of them are going to basically show us the way, right? You're going to see us bounce off supply and demand levels. You're going to see us go grab liquidity. They definitely work together. And if you can understand that and not have this stigma that one is better than the other, it's just ICT offers a lot more, I think, information on entry models and liquidity. I think that's where I like ICT more. But again, supply and demand will still offer us, like, we're still looking at order blocks, right? We're still looking at our order blocks, so that's also going to show us where can price bounce from. Okay, so that 15 minute, we're seeing a strong bounce from this level. Strong bounce from this level. we're kind of just chopping right now. Obviously, we're in lunchtime. We're getting some sideways movement here. Getting some sideways movement. I still believe in the shorts right now. I still believe in the shorts, especially after generating this liquidity. But again, we're chopping, so I'm not going to get any entries. I'm not going to get any entries right now. But I still see the potential in the shorts here. Radical Whooper. Yep. I know exactly what you mean. It's a good idea. Sweet, G-Dawes. See, that makes me happy. Like, I don't think it has to be one or the other. At least my strategy, I pretty much combine the two. And the thing with ICT, this is what scares a lot of people off from ICT concepts, is obviously ICT himself. A lot of people don't like him. And I'm indifferent to him. I don't really care. I think he's offered me a lot of knowledge in the market, so I think that's pretty cool. But again, the concepts are concepts, right? They're theories. And it's how you use them. It's how you break them down into your own trading style. Right? So theory is theory. I don't care who came up with it. I don't care who came up with the theory. If you test it and the theory is working, then it works, right? So I don't really care who it is. It's just you taking that theory and that strategy and making it your own. Exactly. Yeah, guys, so look at how the shorts are coming in, trying to grab this generated liquidity again. Look how it's trying to generate this liquidity again. Joe, look at all the wicks showing relative lows with sell side on the hourly chart. Let's check it out. The hourly chart, yeah, we have a lot of sell side on the hourly for sure. A lot of lows down here, right? We have all these lows. We have these lows down here. All of this, right? So we have a lot of sell side. And we are in a 4-hour bearish fair value gap, right? So the potential of the shorts is still there. That's funny, spiritual trader. That's funny. See, that's exactly. It doesn't matter who created it or who theorized it. Strategy is the strategy. What I mean to say is who made it popular, right? But people are going to be able to. It's all how you break down the strategy and how you use it. I think a lot of people tend to overcomplicate the market and overcomplicate trading, and it can be very overwhelming, right? Because all you hear is everybody fails, everybody fails, everybody fails. There's so much information, there's so much to learn. Okay, well, if you learn as much as you can, and then you can just break it down into simpler terms, you start to figure out, like for me, guys, what you guys know, if you've traded with me before, one of my main trading strategies, entry models, is a breaker, right? Which all a breaker block is. Let's look at the 5-minute. Look at those shorts coming in again. We might go down and hit that full TP. But guys, all a breaker is, it's a liquidity sweep with a market structure shift. That's all it is. It's a reversal pattern. That's all it is. Okay, so call what you want. Look at that. Look at those shorts. So yeah, our full TP just got taken out. It does not need to include a fair value gap. That's what makes it a unicorn model. And that gives me more confluence when there is a fair value gap, because I like to see it trade into that fair value gap. Yeah, guys, look at that. It came down to that second standard deviation. And look how the standard deviations play out. Right, from this breaker. Came down, hit our first standard deviation here. We just came down, and look how we wicked below our second and we start to bounce. So, guys, a breaker, all it is, and this is one of my main trading confluences, right? It's a liquidity grab. So if we're trending one way, we're trending bullish, we grab liquidity once, we trade back down, and then we grab liquidity again, and then we get a market structure shift where look at how this candle closes below this candle here, this wick. you want to see a body of the candle close below our wick on that first low. That's that market structure shift, and that's how you know, or at least you have that confluence, you have that conviction that price is going to continue to trend down, that this is a reversal. And then, you know, when there's a fair value gap formed inside of that breaker, that's extra confluence for me, because now when I see an imbalance, price is going to trade up into that imbalance, into that breaker, and will most likely get a reaction, right? So the market structure shift was this candle right here. See this bearish candle, this purple candle here? Notice how the body closes below our original low right here. Right when it closes below that low, that's our market structure shift right there. So we didn't trade back up into it, which is why I didn't take any of this over here, because this would have been chasing. So I didn't want to chase it. I wanted to wait for us to come back up, or like what we did on the 1 minute. Like I said, you could have gotten entries off this fair value gap, this fair value gap, order block, this fair value gap, and then we got our entry off this fair value gap. Yes, I will post today's video. I'll post it after the session on my YouTube, and then I'll send it into archives, into the ICT Trading Hub archives. And then you can, yeah, if you want to watch this video over again, you can. I'll have that up for you. So, yeah, I mean, guys, obviously I didn't hold my trade. I got stopped at a break even, just barely. Still won the trade, but look how our trade still plays out. Look how the trade still plays out exactly how we wanted it to. And exactly what I said, we're going to generate liquidity, and we're going to come back up, and then come back down and take out the liquidity. Alright, so obviously you didn't see me take any entry up here. But now at this point, I'm just tape reading, right? Just kind of tape reading price, seeing what's happening. And notice how when we take out this low, we wick down, we don't displace it, we come back up. Okay, so we want to see displacement if price is going to continue down. We want to see this, we would want to see this candle close below this low. We have not displaced it. We saw a wick below, and now we see price trading back up. Right? So now what we could look for is accumulation. Now we see that manipulation. Is this going to be the reversal, where now price targets these highs again because it is a ranging Monday? If that's the case, we would want to see price come up and close above these highs over here after manipulating, grabbing liquidity, and we'd retracement back down to take it long back up to these highs, back up to that 5-minute breaker, right? That's what I would be looking for. Joe, are you a runner? I do like to run. The issue for me is I have a herniated disc that I've had since I was like 15, so I have a lot of back pain, so I can't run too much. But I do swim actually. But another injury, I hurt my shoulders, so swimming has been a little difficult for me lately, and which sucks because I love to surf. So I went surfing like 2 weeks ago, and I literally could not swim because of how painful it was. So I got to go to the doctor. I had to get out of the water. I was like, I can't do this. But it is what it is. And now I got to go take care of it. And yeah, my body is in shambles. Oof, 3 discs is insane. Yeah, yoga, Pilates, any of that stuff is, yeah, I do a lot of stretching, trying to heal my body. Yeah, I know, that's why I had to get out. And it was a good thing the waves weren't very big. The waves were only like 3 to 4 feet, so I was fine. Oh, I do sauna almost every single day. Yeah, guys. No, I do focus a lot on my physical and mental health, and in terms of physical health, I gained so after high school, I went to college, I gained about 20 pounds, right, of bad weight, and I was like, you know what, I'm over this, I'm losing it, and now I lost all of that weight, and I'm back to are pretty much around the same. I'm like the same weight I was back when I was in high school, and that's like my healthy weight. So, and I think that has helped me so much with my trading journey. Two is just being disciplined with my physical health and being disciplined working on my mental health, which is always going to be something I'm working on. But the more you focus and discipline yourself to work on those things, the more it's going to clear up your mind to be able to stay disciplined in other aspects of your life. See, I don't have a steam room at my gym. I only have a sauna. 15-minute fair value gap. Up here, we do have a 15-minute fair value gap. Kind of a balanced price range here, but yes. Alright, so we could see if price retraces back up into this 15-minute or up into our 5-minute breaker, or if price is just going to want to continue down and take out this low. We'll see what happens. When you said you enter half a lot, yeah, so that just depends on what your full contract size is. So if your full size for your trading, say it's 2 minis, half a lot would be 1 mini, right? If it's 10 micros, half a lot would be 5 micros. So that's what I mean. I like to get in my trades with half a lot, right? So I'm not entering with a lot of risk to start out, especially on a trade where I'm just kind of testing out the market. I like to go in with quarter, half a lot, just test it out, and then once I see that confirmation, that's when I'm adding into my full position, right? So that's what helps me. You could also do pyramid entries where, say you're trading 10 micros. You could get in to start with 5 micros, right? And then you could add 3, and then you could add 2. So that's like a pyramid entry to where if you're adding positions once you're in profit already, it's not going to move your stop. It's not going to move your break even too much lower because you're adding less contracts into your position. Whereas if you do add half a lot and then you add another half a lot, it's going to move your stop or your break even a little bit farther down. So you might have to either have bigger risk or move your stop loss down. Yeah, I haven't gone to a chiropractor in a while. I used to go to the chiropractor like once a week. Definitely helps. How can we identify breakers? So breakers, like I said, let's look at the 5-minute again. So breakers are a reversal pattern, right? So if we're expecting a reversal, or we see us come sweep liquidity like this, price comes up, we make a high, a low, a higher high, and then we trade down and take out that first low. Right, that's a bearish breaker there. That's a bearish breaker. It's a reversal pattern. We're sweeping liquidity once, sweeping it twice, and then coming back down. We're getting a market structure shift. Yeah. Can you show a bullish breaker? Of course. Let's see if we can find a nice bullish breaker somewhere around here. Let's see if I can find one. We're going to go back in the charts and we're going to look for one. We're going to look for a bullish breaker. Let's see if I can find one down here. There's not really one over here. This looks like a bullish breaker here. This looks like a bullish breaker over here. Okay, so it could be low, high, lower, low. Right? So there could be multiple in this instance. Right? But if we look low, high, lower, low, and then boom, price jumps and displaces this high. So a bullish breaker is just the opposite. Low, high, lower, low. First liquidity grab here. Second liquidity grab here. Market structure shift once this candle closes above. Then we form an order block, right? We never trade back into our breaker, which would be this up close candle right here on the 5-minute. That would be our breaker up here. We never trade back into it. We just see price continue up, right? But again, we actually did trade back into it. If we look on this bullish breaker right here, that's the highest up close candle, we trade back into it, we respect it, we don't close below, and then look what price does, it pumps. right? So that bullish breaker is a pretty strong bullish breaker. You can see how price comes right back into it, and that's the exact level we bounced from. We had that fair value gap, technically a unicorn entry right here, right? Oh, what am I missing? Oh yeah, look at the shorts still going. Look at the shorts still going, right? So what's the next target? Next target is this low down here at third standard deviation. So now we could look now for an entry up here in this fair value gap above. All right, we could look in the 1 minute. Let's look at the 5 minute real quick. All right, we could wait for price to retrace. We could see if it retraces into this. If it retraces into this order block, which aligns right with that fair value gap, this is our order block. So I might actually look for another short entry here. Again, wait for a reaction. I'm going to wait for a reaction. And then if we get a reaction to the downside, I might look for another short entry and try to catch it down, back down to this low. But again, I'm not going to get a short entry off of an extremely bullish, like a very strong bullish candle. I'm going to wait for a strong reaction off this level, and then I'll look to get in short. But I'm not going to get a short position when we see this crazy bullish momentum. Again, we just touched into that bearish order block, so this is exactly where I'd want to see us go short. Okay, I just got in half a lot in the shorts there because we started to see that reaction. My entry is 18,274. Okay, I'll just keep a stop at about 45 ticks, just above where our first TP was at 18,285.25. Alright, so half a lot, 45 ticks. And then if we start to see more of a reaction, I'll get in full lot. Okay, I just got in full lot there. I just got in a full lot. I like that reaction a lot. I like that reaction. Again, we'll see if we get that bounce. We're still showing a little bit of bullish momentum here. But we formed this 1 minute fair value gap. We formed a 5 minute order block over here. We still have our last low to take out down at third standard deviation. Right, so we still have a target in the shorts. We still have our point of interest down here, right? So that's the only reason I'm still looking for shorts, because we still have one more level of liquidity we can take out. If we had already taken out this level, I would not be shorting right now. But since we haven't taken out this level, that's why I'm looking for shorts currently. Okay, my entry moved down to 273.63. So 273.75. So 46 ticks is my stop here. And just got stopped out very quick. Okay, well, that happened. We could still bounce from this level. Let's see how we close. We closed above the fair value gap, which I don't like. We have a lot of momentum on this candle, on this 5 minute. So I don't really like that. Don't really like that at all. Okay, so now I'd wait and see, see how this 5 minute closes. If this 5 minute close is still respecting that order block, I would still look for shorts, but if not, I would wait for price to come back up, at least back up to VWAP, or try to come back up on some of our 5 minute levels. All right, we have a 15 minute fair value gap up here. We've got a 5 minute, this order block is key. If we continue to push up above this order block, I won't think about shorts for now. But if we do respect this level and we start to see a big drop, shorts could still be in play. But no, we're seeing that momentum right now. Got 1 minute left on the 5 minute. We'll see what happens here. We will see what happens. This might be the bottom here, guys. This might be the bottom. We might head back up. Yeah, that was a quick run to our stop right there. Quick run to our stop. So this would only be a bullish breaker on the 1 minute if we close above this high. If we close above this high, that would be a bullish breaker. Again, I prefer to see my breakers on the 5 and 15 minute time frame. It gives me more confluence. Yeah, then it would be a break of structure, but we haven't done that, and we're starting to see that reaction back down. So I still, I still don't hate the shorts, but again, got to be careful at this level. This would be a good level for risk management, getting it up here, because we did respect that order block, but we just closed with so much bullish momentum. We just closed with so much bullish momentum that I don't love getting the shorts, but again, up here would offer better risk management because we still did respect our 5 minute order block up here. But look how that last 5 minute closed. It closed too bullish for me to want to get in the shorts right now. See what I mean? That's what I mean right here. We're still showing that. So if we're going to create a bullish breaker, right, or another reversal, we would want to see us close above this high. This would be our breaker block. Right here, we'd want to see us trade back up, down into that breaker and then go long. So that would be the breaker structure would be above this high right here. Above this high. So we'd have that low high, lower low, price trades up, displacing this high. That's what you would look for in a bullish breaker. And are you guys gonna see the full solar eclipse today? Is anybody in Texas or anybody in the direct line of the solar eclipse? I know I'm not over here in California. Nice. Nice. Dang, that's cool. You guys all got your solar eclipse glasses and everything. Oh, it's cloudy in Dallas? What? Get the welder's mask. There you go. Yeah, I know California's still going to get a little bit of it, but we're not going to see, I don't think we'll see much of it. Okay, guys, we're getting that break of structure now. Yeah, I remember the eclipse from 2017. That was pretty cool, but I think this one's going to be more extreme. We're getting that break of structure if this candle can close above this high. If this candle can close above this high, we'll see a 1 minute break of structure. And then the longs could step in all the way back up, right? Maybe all the way back up to our breaker, targeting buy side liquidity. Again, today is a ranging day. So there's that breaker structure there. There's that market structure shift. So now, again, I don't love my 1 minute breakers as much, but we could still see we could still see the long step back in. I target these highs, target all the way back up to our 5 minute breaker. The 1 minute breaker structure, like I said, is not as strong as like a 5 minute or a 15 minute. Right, so that's why I don't love entering off 1 minute breakers. That's why I prefer to see our 5 and 15 minutes show me something. But using the 1 minute, you're going to be more aggressive, right? It's more aggressive entries, but it is you're risking a little bit more, right? So we just touched into that breaker. So I mean the longs do look good from here. The longs do look good from here. I'd want to see us touch into that breaker a little bit more though. But we did touch into it, so right, if you're more aggressive, you could have gotten that long entry at this point. Alright, like I said, the 1 minute trading the 1 minute can be a little bit riskier, but can still offer good trades still offer very good trades. Big sellers at 18,295. What do they know that we don't? They know everything we don't. Look at that. That's a breaker structure on the 5-minute too, though. Look how the 5-minute close displaced these highs. Now that gives me extra confidence in these longs. And so if you got an entry, I think these longs look pretty good. You know, you could hold up, take TP around VWAP, up around these highs. I think it still looks pretty good. That 5-minute breaker structure is extra confluence. Look at that breaker structure on the 5-minute, and look at those longs stepping in now. Alright, so if you did get an entry and you had your stop below this low, 45 ticks, you would have already hit a 1-to-1 on that. But again, you could keep holding up near VWAP if you got an entry. I don't know if anybody got an entry on those longs. I didn't get an entry, so, you know. But like I said, guys, I tend to take about 1 to 3 trades a day. That's typically what I tend to take, and it also depends on my profit and my loss. Right? If I still see a setup and I, you know, am managing my risk correctly, then I'll still take more than 3 trades as long as the setups are there and I have my risk management already figured out. Yeah, the 5 minutes my go-to. The 5 and the 15 are my go-to. If we retrace back down into this breaker, I'll probably look for an entry in the longs. Yeah, I agree, Obi. I agree. I definitely agree. What the 1 minute does offer us is a little bit of insight, right? We can kind of catch moves sooner than if we do wait for the 5 and 15 minute. That's kind of what it offers, right? Because it starts to set up our structure. It's just riskier because we're not waiting for that confluence of our 5 and 15 minute time frame that are showing us more, right? And like I said, breakout, we form an OB, an order block. That's a price we can bounce from. Right, so we could bounce from this order block right now. Remember, when we break out and we see order blocks formed, we see fair value gaps formed, those are the levels we want to, you know, those are the levels I target for entries. But at the same time, I want to wait for more confluence. I want to see if we're going to get a bounce from this breaker, or if we're just going to continue back down to try to grab our sell side level. Strong bearish candle. If we start to see a bounce here, I will look for longs. If we see a bounce, I'll look for longs here. But if we continue down strong momentum, I'm not going to get anything. Okay, I just got an entry in the longs there, guys. I just got an entry in the longs. Okay, I just got an entry, 18,294.25. So kind of high for my liking. A little bit too high for me, but I'll keep my stop down here around 45 ticks, down at the bottom of this breaker. Give myself room. 18,283 is my stop. I like the bullish momentum we got. I like the breaker. I like that we started to see a bounce from that level. Okay, so now I want to see that momentum step in here and the longs continue. I want to see us at least come up to VWAP. Okay, that's what I like to see. That 1 minute candle is nice. So our first standard deviation off the 1 minute breaker would be this high up here. Notice how our standard deviations are almost always at the same levels as our liquidity. Look at how that first standard deviation aligns exactly with our liquidity up here, our equal highs up here. And these are the equal highs that I pointed out earlier. So I'd probably look to take first TP around VWAP around like 50 to 60 ticks. Probably like 50 ticks. Just target a little more than a 1-to-1 up to like 18,306.75. And then try to hold through VWAP up to our first standard deviation at least. And maybe see if price continues up. Again, we're not seeing that follow through right now. I really wanted to see that follow through. And like I said, guys, the 1 minute time frame is always going to be a little bit riskier to take trades off of. So just know that, and that's why I'm trying to be as clear. I'm trying to be as honest with you guys as I can be, right? To let you know the risk that you're going to be putting into the market with every trade. And when you're trading the 1 minute time frame, it can be more risky than waiting for the 5 and the 15 minute, right? So you guys need to know this stuff before you're getting into trades. You need to know how much you're risking before you're getting into trades. You need to know your risk to reward ratio. Is it worth me getting in that trade? Is it not worth it? Am I risking all my profits? Did I already hit my loss level? Did I already hit my profit goal? Should I be trading this? Right? These are all things you should be thinking about before you're getting into trades. Okay, are you someone that likes to be a little more risky, that likes to be more aggressive? If you are, then this is probably the trade that you'd like to take. If not, you might be sitting out of this trade. Again, I'll probably take first TP up at this high at about 50 ticks. 50 ticks will probably be my first TP here. We got to see a pump up here. And if we didn't have VWAP up here, I'd probably hold my first TP a little higher. But we do have this fair value gap here, and we do have this high. So this is a good level probably to, to take some profit. We are struggling a lot here though. We're not getting that follow through yet. There we go. Now we're starting to see that follow through. Let's see momentum continue to step in. I want to see price continue to push. I didn't like that. We're really struggling here. We're struggling at these highs. Let's push through here. Come on now. Come on, there we go. Let's push through. Keep going. Go take out our first TP. Go take out our first TP. Again, guys, like I said, first TP about 50 ticks right here. Just a little over a 1-to-1 for my first TP. Still stalling here. Still stalling. Let's see us push through. Come on now. We're getting pretty close to our first TP. If you want to take a 1-to-1, 45 ticks would be your 1-to-1. Depending on your stop. If you have a higher stop, you could just try to scalp this, but I don't like that we just wicked above. And we're really stalling here. We're really stalling, but we're in profit at this point. Like, if you wanted to move your stop to break even, you could continue to hold it. You could move your stop down or move your stop up, which I might do at this point. I'm going to move my stop up to like 30 ticks at this point, guys. 18,286.75. At this point, just to manage my risk better. Okay, just to manage my risk better. Okay, let's see if we can pump. See if we can pump hard enough. Our structure's there. Our reversal pattern's there. Now we just got to see price continue to step through. We're getting very close to that first TP. Very close to our first TP. Again, we're above a 1-to-1 at this point, so you could always take your profit there. There's first TP. First TP just got hit. Stop is now moving to break even. That's what I'm talking about there, guys. First TP just got hit. Now my stop's at break even, and now I'm going to look to target either that first standard deviation. And we'll see if we pump through this first standard deviation aggressively. And you could also sell your whole position right here because we are at VWAP and we are entering back into that 1 minute fair value gap. So you could sell your whole position. But I like that we got that reversal. I like that we have a ranging day. So I'd rather hold this trade to see if we're going to try to push through VWAP. Because look, ultimately we could come all the way back up into our 5-minute breaker up here. Alright, so what I'll do is I'm going to monitor this trade. My stop's at break even again, so it's another risk-free trade here. So either I'll take my full TP if we hit this first standard deviation, or if we push through it really aggressively, I'll probably won't sell and I'll just move my stop into profit, and I'll look to try to hold it all the way up to our 5-minute breaker. But if you guys want to sell your whole position here, you can. Like I said, we're in a 5-minute fair value gap. We're at VWAP, levels of resistance, so we could see price bounce from this level. So that's up to you. A little bit of divergence between NQ and ES there. ES failed to take out that high, NQ swept that high. Okay, so this might be a quick scalp if we can't push through VWAP. Again, we already got the win. We already moved our stop to break even, so it's another winning scalp either way. Either way, another winning scalp. Okay, so far 2 wins, 1 loss, alright? 2 wins, 1 loss. So I'm going to keep holding this. Like I said, this is risky to hold this because of our resistance levels up here. They are pretty strong. Our resistance levels are pretty strong. Something to look out for. But what I loved was our market structure shift on the 5-minute. And then look at this 5-minute order block we formed too. So again, even if we retrace, we could see us bounce from this 5-minute back up. So let's see if price comes back down and stops me out at break even, or if we see a bounce from that order block and we go up to hit a full TP. I'm just going to let this one run. Like I said, 3 trades is normally my limit of what I take. 3 trades is normally my limit. Sometimes I'll take more, depending on what my account's looking like, depending on what the market's looking like. But so far, we've taken very good trades with good risk management. All right, we have 2 wins, we have 1 loss. Our risk management has been solid. Our setups have been solid. We've waited for confluence. So this is the type of trading I like to do on a Monday like this, right? Where you don't have to just stick to shorts or just stick to longs. You can definitely trade the shorts, and then you can trade the longs, and then you can trade the shorts, right? If you understand the market and why it's doing what it's doing. If you understand why the market is going up and down, what levels it's going to target, then you can definitely trade the longs and the shorts. But for beginners, I tend to say not to do that because it can mess with beginners, because then they start to get overwhelmed and start thinking about too much. Yeah, I did add into a full that trade. No problem, NFT. Have a good day. Have a good day, man. Okay, so we came back down pretty close to our break even. My break even now moved up to 9.6, so it's now like up to here. Okay, so it's a little bit higher. So we're getting pretty close to being stopped out here. But again, we have this 5-minute order block, so I'd love to see a bounce from here before getting stopped out. I'd love to see a bounce from here off this 5-minute and for us to push through VWAP up to these highs. We'll see what happens here. Again, my break even's pretty high, so I could get stopped out here at break even pretty soon here, like right now. Ooh, that was within 1 tick. Okay, so I'm out now. Alright, so today's been kind of weird for me, guys. I'm still kind of sitting around break even. I'm in profit, but I'm not that far into profit because that second loss I took was a full position, which was the risk I was willing to take because my first trade I wasn't crazy into profit. But again, the longs could still step in here. I think the longs probably will still step in here if we get that bounce in the 5-minute. But that's probably all the trades I'm going to take during the session for now, guys. I think I'm going to take a little break, clear my mind, go eat some food, get some sunshine, and then I'll come back and see if I want to take any more trades. And I'll let you know if I'm going to take any more trades. But again, Tori should be on at 11. All right, so I mean, good session overall. 2 wins, 1 loss. Still a good session. All right, and I think it was cool because we really got to focus on waiting for our setups. We got to focus on Confluence, and we really did get to do a lot of education, which I always love. I think that's the most important part. Aside from the live trading, I think education is the most important thing, because at the end of the day, I want you guys to be able to see these things on your own. I want you to be able to pick up on these things on your own, right? Okay, guys, well, great session. I appreciate everybody that was here, joined up. Happy Monday. I hope for those of you that get to see the solar eclipse, have fun. That'll be a really cool experience. Anyways, I will catch you guys tomorrow. If you don't hear from me about any trades, I'll catch you tomorrow. We'll come back. We'll kill it again. All right, guys. Let's keep this positivity, this mentality going. We continue to take good trades. We continue to win. Yeah, let's keep this going, guys. All right. God bless everybody. Enjoy your day, and I will see you all tomorrow. Peace.